Hey everybody, it's Patrick Moore with Ironclad Wealth Management here, and today I've got a quick video going over a new tax strategy that I love, mainly because it's something where you don't really have to go out of your way to do it. Sometimes when we talk about these tax strategies, it's like you've got to do this 10-step process to even make it work. This is not one of those. And so today what we're going to be talking about is the Georgia Retraining Tax Credit, which as the name may imply, is about retraining your existing workforce and doing it in such a way that you're going to receive some tax credits for doing it. Now, this is a Georgia specific tax credit. Your state may have other ones similar, but so this is mainly a video for those business owners who are based out of Georgia, and specifically not necessarily based out of Georgia. It's for those who have employees based out of Georgia. So let's get started. First things first, as we always do, this is general information. It's not individual tax advice. If you think this one works for you, take it to your accountant, see if it does. Hey, give me a call. But it is something that, you should make sure it fits into your individual circumstances before pursuing it. Now, we're going to cover three main things: what it is, how it works with an actual case study for you too, and then next steps. What are the 6 or 7 things you need to do to make this happen? And I know I said it's easy. It's really 6 or 7 not very difficult steps. So the Georgia Retraining Tax Credit is from 1994, and as the name implies, it's for retaining and improving your existing employee workforce because, as we know, technology, new equipment, stuff is always changing, right? And you need to keep those employees up to speed. So this is a really well-intentioned tax program. If you think about it, the other employee tax program called the Work Opportunity Tax Credit is also great, but it's for new employees. This is a program that is only for existing employees, and it has no industry limits, meaning you don't have to be a certain industry like a restaurant, hotel, factory to qualify. It's available to anybody as long as you have keyword full-time Georgia employees. So how does it work? Well, what it does is it analyzes the cost of projects to keep your existing workforce trained. Meaning you can't just get it for having people. You have to actually put a training program in place. And then once you do that, there's 2 costs that you can apply to this credit. The first are direct costs, meaning you say, okay, hey, Patrick, we need to train our workforce to implement this new, engineering software, whatever it may be, right? That actual training, meaning getting that consultant out there, getting the materials like the supplies to train somebody, those are considered what's called direct costs, and you get a 50% kind of credit towards the tax credit, right? The second thing, which is kind of a soft cost, are employee costs, meaning for the employees going through training, you can get a credit for their salary and wages for the time they spent training. So if you look at this, it's up to $500 per training, and then it's $1,250 for each year, meaning you could spread out 3 different trainings throughout the year and get up to $1,250 per employee. Now, a few other notes: you can only offset up to 50% of your Georgia liability. You have to do it within 1 year of your filing deadline. And if you have more than that 50%, starting January 1st, you can carry it forward for 5 years, meaning if you have a credit that's 75% of your Georgia liability, you get to take 50 this year, roll the remaining 25 over to next year. So that's kind of how it works in a nutshell. But let's kind of dig into a few of the details real quick. So the first is on direct costs. I gave an example earlier of like an instructor or consultant, especially kind of like in the software world, right? Hey, you get an implementer to come in, help you do it. That's something, if they're helping you train the employees, it may qualify. The other are material supplies. If you have like equipment that's just for the training, like if you are installing new equipment in your factory, those can all qualify as well. Now, one thing that you do need to know is some of those soft skills like safety training, career training, management leadership training, those don't count, unfortunately. And then, like I said earlier, it's very easy because it's something you're probably already doing in some form or fashion. But what you're probably not doing is you're probably not documenting the hours your employees are training compared to other activities. And so if you aren't, the only change you have to make, start taking those notes, okay? All right. The second and probably more substantial thing you can offset when you're doing training are those employee costs. Just a quick breakdown, it's the same that we just discussed. $500 per training, $1,250 throughout the year, so that can be reached in 3 trainings. And where it gets a little different is that it only covers frontline workers and frontline supervisors, meaning like tier one managers, right? So if you have an organization with a couple of tiers, your executives aren't going to qualify. It also only covers full time workers and those who have been employed for 16 weeks, meaning, like we said earlier, it doesn't work for new employees. And then, so finally, like I said earlier, it's excluded. The executives are excluded, as well as part time workers are excluded. Part time meaning 25 hours or less per week. There are also certain limitations on which training is excluded, but it's, in my opinion, a fairly limited exclusion because it's stuff that is so broad you wouldn't expect to receive any credit for doing this. What you do get credit for is you get credit for new software, new equipment, and the training related to it, right? Now, you're not getting credits towards the actual cost of the software, remember, or the cost of the equipment. It's the cost of the training related to that equipment. But one of the things that you can see I have excluded here, next out, is Microsoft Word, right? If it's basic word processing, if it's like Excel, if it's basic data management and kind of things that you need just kind of like run your company and every company needs, you don't receive a credit towards that. However, more specialized custom trainings is where you can kind of get credit towards the Georgia Retraining Tax Credit. Now, I got a quick case study I want to put together here. Obviously, just kind of slap this one together and kind of customize it to fit the parameters here. But I've got an engineering firm, 25 employees. They got some new engineering software. Who knows what it is? Maybe it's AutoCAD. Who knows? Or maybe it's kind of a supplement to AutoCAD. They're doing a 2-day training session, and they've got $50,000 of Georgia tax liability. So let's work left to right here. So what you can see first is I've got people's names, role, and salary, which, remember, the role may exclude people depending on what their job definitions are. The first thing you need to do is kind of convert salary to an hourly rate, which you can see that I've done here kind of right in the middle, right? We've got $120 an hour for the top 2 people, and then it steadily trickles down here. You need to have that information, which obviously everybody does, to calculate your training costs. So if we go left to right, this is designing and engineering software. If you look at who was trained, everybody trained except for 3 support staff members there at the bottom, and the intern also trained because she does some engineering work. Now, it was a 2-day training, which means that there were 16 hours for all those people who trained. And if you go to the next column, who was eligible? Well, there's 4 exclusions. It's the top 3, Jim, the president, Sally, the chief of engineering, and Jared, the director of sales. Them, as long as it's going down to the very bottom, Haley was also excluded, and those were excluded for 2 very different reasons. The top 3, because they weren't frontline supervisors, they're kind of the C-suite, they're the ones running the company, they do not qualify. And then Haley at the bottom hasn't been continuously employed, and she's not full-time because she's just a summer intern. So then if we take all that information together, you can see what falls into the eligible training costs. If you just take the hourly rate, multiply it by training hours, you get your training costs, and then you have to apply the limit over there on the far right. All that totals to about $8,500 of credit, which, remember, you're doing the same thing you always did. You just weren't documenting it earlier. And then at the bottom, you had a training, some materials, a guide, and a consultant who came in, and they cost about $6,200, which you get half credit for that. And the credit winds up being $11,625. And that's just for training session 1, remember. You could do training session 2 or 3. Now, looking at the results, right, we had total expenses of $18,800. But remember, only $6,250 of that were hard dollar costs. The rest was salary you were already going to pay. So you had $11,000 of credit, and you only had $6,000 of costs. Really, that credit was a net benefit of $5,000. And if you look at it, there's kind of 2 ways to look at it. The first is that you saved 61% of your costs, or 61.75% of your costs. Or you could look at it and say, hey, I reduced my Georgia state tax liability by 23% just for doing things I was already doing, which is, once again, why I love this credit. If you think you fall into this bucket, there's a few steps you need to follow. The first is probably talk to your accountant or your tax planner because this is going to have to go on your tax return. The second, and this is where it's actually really, really taxpayer friendly, is that the technical college system of Georgia is the one who approves this tax credit. And you can get a preliminary approval from them, meaning before you go through the effort of seeing if this training is done and documented, you can say, hey guys, I'm looking at implementing this software. Here's what we do. Here's what it's going to affect. Here's who's going to be training. And they'll send you something back and say, hey guys, this does qualify, or hey, this doesn't qualify, and you might need to change it before you implement it, right? So you save a lot of time and hassle before you go through it and then don't qualify for the credit. So once you get pre-approved, you do the training, you document the expenses, you verify them, and then you submit them back to the technical college. They give you the check. It's called a completion form. And then you submit that form and an additional tax credit form with your state tax return, and you get the tax credit at the end of the year, right? Which, if you're doing it and this scales up, there's no real limits on size, it could be a substantial, substantial amount in tax credits that you get at the end of the year. So, with that being said, I hope you found this helpful. Hope you found it informational. This is just something that I think is underutilized. It's under publicized, but it's a good program, and it's not something where you necessarily have to shake the status quo up to get it. So if you have any questions on it, reach out to your accountant. Reach out to me if you want to schedule a call, if you have any interest in kind of, putting together a full tax plan for you and your business. But otherwise, I hope you found this really helpful, and I hope you have a good rest of the day. Talk to you later. Bye-bye.